This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Hi, and thanks for tuning in to another edition of the Alternative Investing Advantage podcast. My name is Alex Perny. Today on the download, we have relatively stable markets considering the huge fluctuations that have been happening throughout the last quarter of the year with all of the different earning reports and everything coming out. However, several large lawsuits that have been cropping up in the tech industry have seen some movement coming across the likes of Facebook and Tesla regarding some things that have been filed within different jurisdictions around the world. Facebook facing a $150 billion lawsuit coming out of Myanmar regarding the genocide happening within that country. So definitely some very serious allegations coming out of the company's legal team for that one. Now, we also have the Security Exchange Commission investigating Trump's new social media company. So it'll be interesting to see what happens with that new fledgling company from the former president of the United States. However, we are seeing the Dow climb as investors see lower threats from the Omicron variant of the coronavirus. We had seen quite a large market dip with the Delta variant earlier this year in the middle of the summer, but markets are seeming to remain relatively stable with what has certainly come out, with what has been coming out regarding Omicron. Part of that having to do with what is being seen with the transmission. Also, White House Dr. Anthony Fauci indicating some early data on that being encouraging as well. Now, we also do have some very interesting market news with regard to things that are maybe a little bit more interesting, especially with the alternative investing advantage theme of this podcast, is that non-fungible tokens, or NFTs, have been seeing enormous growth with different stories coming out about different people making just absolutely handfuls of cash in these different types of markets. We'll certainly be having some more guests on that can explain these in a slightly greater detail, but the market for NFTs is exploding right now with people making very high rates of return. However, this markets do tend to still be just as volatile as some different cryptocurrency markets, and especially with some news coming out of the Security Exchange and the Federal Reserve regarding regulations on different types of cryptocurrency trading, seeing those markets come down a little bit with almost 300 billion wiped off of the cryptocurrency markets in the past few days with different legislative changes that might be coming about. So definitely some things to keep in mind. This has been The Download. Today on the what is a 401a plan? Now, almost all of us have heard of what a 401k plan is, and although the small acronyms within the Internal Revenue Code can be a little bit confusing, it is important to understand just how some of these different plans work together. So the main ones that we have are the 401k, the 403b, and the 401a. The 401k being the private sector option, most notably used by many companies to offer employment benefit packages to their employees. 403b plans being utilized for nonprofit organizations, and then governmental 457s being kind of an adjunct or in a similar vein to what the 401a plan is. What is a 401a plan? It is an employer-sponsored plan, and both the employer and the employee can contribute. 401a plans are usually used by governments and sometimes nonprofit organizations as well. 401a plans give the employer a large share control over how the plan is invested. So it takes the control over the investment strategies and puts it into the hands of the employer and doesn't necessarily give it over to the employee. An employee can withdraw funds from a 401a plan through a rollover to a different qualified plan as a lump sum payment, and also the option for an annuity is there as well for plan participants. And lastly, investments in a 401a plan are typically lower in a metric of risk than typical other employee-driven plans, such as 401ks, and include things like government bonds and are focused on value-based stocks. This has been the What Is.
Okay, everyone. Thank you very much for joining us for another iteration of the Alternative Investing Advantage podcast. Today, I'm very pleased to welcome Jake Marmulstein with Groundbreaker Technologies. It's a very interesting platform that these people have with regards to integrations with the multifamily and syndication space for real estate investors. So it's a little bit of a departure from maybe the traditional investor that we've had on the podcast so far. So we're really excited to bring kind of a new perspective on some of the stuff, because not only is investing in real estate interesting, but there's so many different moving parts to it that the technology aspect of it really can't be overlooked. And I'm really pleased to have Jake on with us today. Jake, thanks for being on with us.
Yeah, it's a pleasure to be here, Alex. Thank you very much for the opportunity.
Awesome. My pleasure. Thank you. So give us a little bit of intro about yourself. I know Groundbreaker started back in 2011, and we'll kind of get into maybe the catalyst that kind of, gave the impetus for starting that company. But tell us a little bit about your background and where you came from with this, and where you are now.
Yeah, so my real estate career started pretty much when I was working for a real estate investment trust, and I had studied real estate finance at university. I was very entrepreneurial while I was in the real estate investment trust. I found that a lot of the things that we were doing were very, very antiquated. We had our own internal server. We were using PowerPoint presentations to create pitch decks for our investor committee and printing them out and then checking them for design flaws and formatting errors. And it was, a lot of Excel data entry and emailing one-on-one investors back and forth, trying to get them to pick up their K1s or information that we had already sent them 10 times over. So I was very frustrated with that process. And I knew that there was definitely ways to improve it. But the connection to create Groundbreaker and where I am now really didn't start until two things happened. One, I started living in Brazil, working for a digital accelerator that took concepts that were proven in the Western world and brought them down into South America. Such as creating a clone of any of the popular apps that we use nowadays, and then bringing them to market there. And I got acquainted with technology, and then I started to actually look around the city. I knew people in government and knew what renovations were taking place in the city center, and I eyed this distressed hotel, and that was really the area that I like to invest in. And I saw this hotel and I wanted to buy it, and I wanted to raise money, and I had a tremendous amount of difficulty doing that. Not only the fact that I wasn't very experienced, but I didn't have my stuff together. It was very hard to appear professional, and I was raising capital in a foreign country. So I came back to the United States, and the second trigger that gave to where I am now was the Jobs Act passed. And I saw that technology and the internet was going to be a huge, that was going to change the way that we invest in a really big way. So
awesome. Yeah, I've had actually a fair amount of kind of crossover experience with that when I first started in the investing world. Investing in Central and South America with IRA retirement plans was exceedingly popular. I had, kind of fresh out of college doing this, and all of a sudden I get documents dropped on my desk for corporate resolutions for, buying places in Roatan. I was investing in Colombia and all sorts of other places. And I'm like, I don't think we covered this in my investment finance class. So it's very interesting that you would have kind of a background. At least we have some crossover in Central and South America like that. But, it's nothing will kind of prepare you for, issues that can come up more than, raising capital when it comes to, geopolitical stuff that you're used to in one place and then having to do it in another. And you can really kind of see some definite efficiencies that can be made. So, you transition back over into the US, and then 2011 comes around, and, the idea for Groundbreaker breaks ground, if you will. So, kind of tell us about what pain points that y'all look to identify? I know you, when in our previous conversations, had kind of talked about the professionalism of it, trying to put things together, and I think you probably saw that in that hotel you were trying to buy down in Brazil. And I've seen that with things, especially the one deal that comes to mind that I was helping out with in Colombia. It was just a million moving parts and people looking at things differently. So you're back here. You identified this thing of trying to conglomerate a lot of different parts of the investing pipeline, especially for larger commercial and multifamily. So talk to us a little bit about that, about where Groundbreaker came from and what you're doing now to improve that process.
So yeah, it's at the beginning of the road, it was all about taking advantage of this opportunity that we saw in real estate investment firms really not being equipped to shift their business so that they could leverage the Jobs Act. And what we found out as we went to market with a solution that helped improve professionalism and their back office efficiency while giving them the capability to do things like a 506C or a 506B type raise using the internet to be able to funnel more investors into their deals. We found that really it was about making experience have less risk, get tighter experience for investors. So it's just you're easier to work with as a sponsor by having a technology, forgetting about the legal and regulatory side. That's important, but the initial focus of crowdfunding and raising capital publicly and getting access to alternative sources of capital over the years became less interesting and de-emphasized when it came to value that the technology would bring as far as elevating your company's brand, increasing your risk, increasing your team's productivity, having structured data that allowed your team to collaborate on information that used to be buried away in 100 different spreadsheets and now is in one system all in the same place. And then your investor satisfaction increased because they could access their information without having to ask you questions. And you could do things like sending distribution payments or uploading K1s in like a half hour, as opposed to that taking your whole entire day.
Yeah, exactly. And 2 points I kind of want to bring up. One, I think it's really cool that you got your, the impetus for the start kind of from the Jobs Act, which is really the piece of legislation. If people aren't inherently familiar with, what that is that are listening to this, it was a big chunk of legislation that is one of those things where it had a lot of things buried in it, but it also opened up relatively the floodgates for a lot more people to be able to raise capital for projects. There was people think of the big crowdsourcing and crowdfunding platforms that got their starts in the early 2010s. That all kind of came out of this Jobs Act. And then you have subsections of this, the 501Cs and then Reg D offerings and a lot of different things that made raising capital a whole lot more available for syndications. But like you said, the people that maybe are putting together the syndication aren't necessarily attorneys. They're real estate investors. They understand the deal, but everything else that goes along with it, like being able to accurately and timely report K1s back to their investors, looking at spreadsheets and rent rolls and things, those aren't always the things that, the person that can go up and literally scratch the paint on an apartment complex is, the best at doing. So Groundbreaker kind of brings in all those other pieces and aggregates them and makes the, creates an ease of workflow for that. Is that correct?
Exactly. It's like if you wanted to be able to syndicate or you're raising money from investors, you're reporting to them, you have to combine a ton of different tools to be able to do that. And you have to know how those tools are supposed to interact with each other. With Groundbreaker, it's right out of the box, a platform that's built specifically for raising capital and managing your relationships to your investors. So we do a lot of that foundational work for you, and you can just leverage the tool to be able to execute on the things that you do best. Hopefully you're spending less time having to answer the simple questions you're getting from investors, and you're spending less time doing the admin work, so you can spend more time doing deals, raising more capital, and building a more robust portfolio with investors who are going to be pleased with the level of transparency and reporting, and they're going to want to come back and allocate to additional deals, additional capital, and so on.
So what are some things when, obviously people start one way and then things change over time? You've had, I'm assuming sometime this year is your 10-year anniversary. So if it's already crossed, congratulations. But, with being in business now for 10 years, obviously, at least, with the Jobs Act, we've seen a multitude of different changes and tweaks and things like that. So from where you got your start then on some of the workflow identifications that were big issues for syndicators, we're probably just a lot of, like you said, spreadsheets, emails, things like that, interactions with clients. What are some things that maybe held true then that were, big core focuses that have maybe shifted? What has stayed the same? And where do you kind of see this going in the future with regard to how technology can really help to benefit these syndicators and capital raisers in a big way?
So for us, the way that we started, we had a very configurable platform, very robust. It allowed for you to do 506C, 506B, so you can switch between a public raise or a private raise. You could do the whole investor verification workflow through the software. We were even moving towards being able to do other regulations at the same time. So you could split part of your capital stack into different raises and different regulations inside of those raises. And it was very much, we were solving that problem, the legal problem for the companies to allow them to have flexibility over the type of raise. But what we found out was that actual public raises from the Jobs Act were not the problem that we needed to solve. The problem was about making technology for real estate syndication and fund management easy to use. So we actually revamped our platform. We built it with less configuration and just more simplicity around raising capital and managing investors. And so the thing that we learned and where we're really going is make the process of real estate investing easier for everyone. And technology is just a tool you use to do that. The technology is supposed to be a facilitator. It's not supposed to be complex. And the less configuration and the less bells and whistles and features that it has, it is sometimes better for this audience of people who, they're onboarding into SaaS, maybe for, software service, maybe for the very first time. They look at technology and I think, a lot of people are underwhelmed by what they end up getting because they end up getting oversold in the process. And we found that was a really big problem. So we just wanted to be a simple and easy to use solution that, makes your life easier.
Great. Yeah, I can definitely see where that comes in. I've been dealing with real estate investors. We kind of got our start, at least in our both of the current professional careers, around the same time, 2011. So for about the past 10 years, I've been dealing on the strictly the investor side of things and seeing a lot of, pain points and issues and questions, frankly, from the investor side, not necessarily the syndicator side, because we'll get people that come to us that are actually syndicators that say, hey, I'd like to accept in some tax qualified money. Okay, great. We walk them through the process of having IRAs become subscribers, making sure that, we get K1 reporting back done accurately to the IRA. So there's no tax liabilities and all the pass-throughs are done correctly. So I can definitely see, from the complexity angle, how that really does kind of make sense. And it's interesting, honestly, I would have pegged it the other way around, where maybe you started as, a very, very simplified platform and then kind of built out to be a little bit more complex, because if anything, that time and the evolution of our marketplace has seen is things get more complex. I've seen, people do debt swaps on different real estate ventures. I've seen people actually do full-on exchanges of whole apartment complexes, hundreds of units, and exchanging them for other hundreds of units. So I will say, if anything, I've seen things get more complex, but I guess it would kind of make sense that simplicity, people always, my grandfather saying, keep it simple, stupid, the old KISS method holds true for a lot of things. And I guess when you're talking about is something as complicated as technology, that would kind of make sense. Now, from the simplification aspect of this, Has that been kind of across the board that you've seen as simplification work well for your business model, or have some things continued to need to be a touch more customizable? And do you kind of offer that? Do you offer kind of more of a more customizable platform for some people that want it, or do you find that really everyone benefits relatively the same from a simplification of the technology standpoint? From, like you said, you do the reporting, help with capital inflows and outflows and things like that. Is there any part of it that doesn't fit that mold of simplification that you mentioned?
So yeah, absolutely. There's times when people want to be able to do something, and or they may see a demo from another company, or they think we're something else. It's all about the segmentation and the expectations that we create as a business. And when I say segmentation, I mean what kind of customer we're going after and what problems we promise that we're going to solve, and what we want to solve really well now versus what we might want to solve well in the future. We can always expand the capabilities of the platform to be able to address more use cases and more customer segments. Where we focus best right now is really on early syndicators, early fund managers, and people who are focused on middle market, who might have a handful of assets in their portfolio. They might be growing very quickly, and they'd have a stable of anywhere between 5 investors and hundreds of investors. But most of the time, they're not looking to us to streamline and automate their institutional grade reporting. There's just certain things that we specialize in as a group, so we can do them really, really well for that segment of the market that we know is underserved, that don't have the tools, and they also may lack the education. And so we just think that that's big enough for now. As we continue building out the capabilities of the platform and the service, we just want to be careful to stick to that simplicity of the experience is core to our value and to what we provide. So as long as we can make things simple and we can do a really good job at it, then we keep expanding up the food chain to more complex type of real estate transactions.
Yeah, you definitely don't want to fly like Icarus when it comes to something like that. So now I want to make sure that people kind of understand a few things, because a little bit of this talk has been a touch complex, not necessarily for most people, let's say someone that's raising capital listening to this, but we get cross sections of people that are investing in single family homes, to people that want to buy gold bars in an IRA, to people that do all sorts of interesting things with their retirement plan. So I like to make sure that we, get the point across of what some of the benefits of some of the things that people out there are doing, and bring them interesting perspectives on it too. So you said you focus on middle or small market syndicators, right? So, would that be someone that is managing, like 1 or 2 deals, maybe 300 or fewer doors? Is that kind of maybe what would be the aspect of kind of what you focus on? And is that relatively accurate?
Yeah, so the customers can start out, say that you're doing your first deal, and you may start with an ambitious deal. We'd consider maybe a 50 unit to 100 unit an ambitious first deal for a group, but sometimes they might be doing just a small, like 12 unit or 20 unit multifamily acquisition, and they're buying it and renovating it and repositioning it, and they'll grow their portfolio from there. Some of the larger customers we have are doing multifamily portfolios of 300 to 500 units. Those deals might be $80 to $100 million in all in. And you might have, the smaller deals, the 18, 20 unit deals, as $1 to $5 million deals.
Sure. Now, for someone, let's say, just starting out, I could see someone sitting there, they have an apartment complex. I literally have one down the road from my house that I've been just out of morbid curiosity trying to figure out who owns, because it seems like it could be a good deal, but something tells me that they probably want way too much for it in this marketplace. So who knows, maybe one day I'll get into multifamily investing. But when it comes to someone, let's say, they find that deal and now they're kind of scratching their head to say, great, I got something under contract, but I don't know, my head from the hole in the ground when it comes to managing this? If they were to contact someone like Groundbreaker, do you necessarily help with the capital raising part of it, or is it mainly just the bookkeeping, reporting, and compliance aspect that you help with? Because I think a lot of people, and especially the people that we target with this, are people that are maybe new investors into multifamily syndication, or maybe they're trying to syndicate their first deal and raise capital for it. So if they're trying to get the technology side of this nailed down, is that a part of it that you help with, or is it just kind of part that you manage once they bring investors in to help facilitate the flow of capital, the reporting on that capital, and everything like that? Tell us a little bit about where your services kind of start and stop when it comes to engaging clients.
Right. So we want to get in as early as we can with a customer. If they have a syndication idea and they need help figuring out how they're going to find the investors, we can direct them to resources that are going to help them to build that investor base. You might not find that directly through Groundbreaker, but we're a source of information, partnerships, and services. So that piece we can set them up with, save them the brain damage of having to network and read a million different articles on the internet, not knowing which one is the best or not. We'll send you guys to an expert that can help you with building your initial investor base, getting your entity formed, getting your subscription documents done, your PPM done, your marketing materials for your investors done. Those things will fold into Groundbreaker, will help you onboard your investors to the platform with all your subdocs and marketing materials, so that once you are ready to raise the capital for that deal, you can go and do so on Groundbreaker.
That's awesome. And that's really cool that you would say it like that, because that's a very similar position to where Advanta works in. We're a non-advisory firm, but we handle a ton of capital and a ton of the flow of that capital as well. But if someone comes to us and says, hey, I'm putting together this syndication, can I get, I need some capital, who has it? Say, hey, I can't necessarily, say, hey, here's a spreadsheet of people I can, but hey, here's some people to talk to. And then when you want to take in tax qualified money, that's the part that we're set up and have the workflows in to manage and do for you. So for what, it sounds, for what we do for the tax qualified alternative investing market, basically you're doing for the technology workflow side of the multifamily space. So it's cool to see how two completely different companies can really have a kind of a core overlap within that segment. So that's something interesting, certainly, to find out. Now, when it comes to that aspect of the help that you provide clients, at what point do you kind of, I should maybe try to figure out how to ask this question. Where do you really kind of see the lines being drawn of where people might get a little frustrated with the scope of things that you don't help them with, and how can people try to avoid that? Because obviously we as service providers always want to help our clients with everything that they do. But here at Advanta, one of the big pain points is they'll come and ask me a very specific and pointed question about the maybe legal aspects of what they're doing. And I can answer almost all of it, but then I'm saying, hey, you got to go talk to an attorney, or maybe this type of service provider, or maybe it's someone that maybe you might even have to do your own research. And then they get a little frustrated. What point does that kind of happen for you, and what recommendations would you have for someone that comes to you and things that you've seen people have issues with, and how to help maybe avoid the things that you can't help them with in some aspects?
Yes, I'm really glad that you asked that question. And I think that we have seen that it's our responsibility in our space, because of the customers we focus on, that our support in really anything that they need is absolutely essential. And it's one of our core values to be obsessed with our customers. So we want to be there as a resource for them, no matter what they need. There's very common themes. Usually it's around investor acquisition, entity formation, property management, legal services. It could be property management services. They might need something on the property, exactly like photography or underwriting and analysis. Groundbreaker doesn't provide those services directly, but we have a network of providers who do. And we've aligned ourselves with those people, and we've done the vetting for you. So if you come to Groundbreaker and you need help on anything, we already have somebody in our network that we've known throughout how we've been around for long enough that we've gotten to know who the providers are. We've gotten to know who the ones that we wouldn't recommend are and the ones that we would recommend are, and we've worked with them. So our customer success manager follows you from the beginning after you sign a contract with us to the very end, as long as you need us, and we're an extension of your team.
Okay, great. So you aim to be that extension, try to help bridge that gap of, instead of kind of having that relatively precipitous drop off and where your service ends, to try to help network out with that. And we're the exact same way. It's always hard to navigate some of that, especially with how laws are written and things like that as to what you can and can't do. But the worst thing I think anyone can do in any industry really is not try to provide at least some guidance past where your service ends and what your actual client needs. So it's good that you provide that. I think I would be remiss if I said that I would be happy to have someone on that didn't want to at least try to provide that kind of service to their clients. So it's good to hear that is a focus of what y'all do, because it's important to us as well. We've been in business since about 2004 and have managed about a little bit over 7,000 individual clients right now. And real estate is a core of our focus, and there's so many things that go into real estate as y'all understand, especially from the multifamily side. When it comes to syndicating, subscription agreements, PPMs, all that kind of stuff. It's a crazy world out there. Now, we like to keep these things to roughly half an hour, so we'll try to bring it in for a little bit of a landing. Maybe share one thing that has really helped you in your industry, whether it's been just constantly doing research on where your market is going, one habit that you think is really helpful for you, what has helped you in your role as the leader of Groundbreaker, that you might think would be helpful to other people, or maybe help you stand out in your marketplace, if you share that with us.
So there's so much good education and wisdom out there actually nowadays that I've discovered through podcasts. It's funny that we're on a podcast as we talk about this, but yeah, as a CEO of a growing, rapidly growing technology company in the real estate space, things are constantly evolving, and I have to constantly evolve. So I use podcasts on real estate education, on leadership, to be able to see ahead of my gaps and improve my skills. One of the podcasts, I like what Bigger Pockets does. I like what Joe Fairless does. I like what Jake and Gino do, the kind of real estate education they put out there. And I like podcasts like how I built this, which is about tech entrepreneurs and their story of how they built their company. So I would say, get a great podcast. People don't read books as much anymore, but podcasts are great. You can listen to them anytime. So
yeah, I think that's a great point. And not necessarily reading, but so much more of the information isn't put into print either. You can read some fantastic books out there. There's some things that I would highly recommend people go out and read, but all the more cutting edge information tends to be on podcasts. We're part of Bigger Pockets as well. We've, obviously you and I met at Jake and Gino's multifamily mastery event, which was fantastic. And I would kind of parrot that as well. At least, obviously we want to get our guest opinion, but hey, I'm the host, I'll give mine as well. But it's education is key. That's a huge thing that we are very, very forward focused on here at Advanta. So I would recommend that as well for anyone listening. If you're trying to get involved in multifamily real estate investing, which is a hugely growing segment of what we see our clients doing. People like Jake, are building out parts to make the more complicated things easier so you can focus on your core competencies. But education is key for that. So that's a great way to end it. Jake, I really want to appreciate you being on the Alternative Investing Advantage podcast here at Advanta today. I know your time is, very, very busy, so I'll let you get back to your day. But again, thank you very much for being with us.
Thank you for having me, Alex. It's been a pleasure.
Thanks. Thank you for tuning in to the Alternative Investing Advantage podcast. Tune in next week for more investing tips and strategies.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.